Good morning, ladies and gentlemen, and welcome to the 2020 Annual General Meeting for ALS Limited. My name is Bruce Phillips and I'm your chairman today. As you're aware, due to COVID-19 travel restrictions and public gatherings restrictions, the meeting today will be held virtually and there is not a physical meeting where shareholders can attend. Today, shareholders and guests are participating using the Lumi online platform or the Lumi AGM app through a computer or mobile device. This allows shareholders, proxies and guests to attend the meeting virtually. All attendees can watch a live webcast of the meeting as well. In addition, shareholders and proxies have the ability to ask questions and submit votes. Questions can be submitted at any time. To ask a question, press on the speech bubble icon. This will open a new screen. At the bottom of that screen, there is a section for you to type your question. Once you've finished typing, please hit the arrow symbol to send. Please note that while you can submit questions from now, I will not address them until the relevant time in the meeting. Please also note that your questions may be moderated, or if we receive multiple questions on one topic, amalgamated together. Finally, due to time constraints, we may run out of time to answer all of your questions. If this happens, we will answer them in due course via email and/or posting responses on our website. Voting today will be conducted by way of poll on all items of business. In order to provide you with enough time to vote, I will shortly open voting for all resolutions. At that time, if you're eligible to vote at this meeting, a new polling icon will appear. Selecting this icon will bring up a list of resolutions and present you with voting options. To cast your vote, simply select one of the options. There is no need to hit a submit or enter button as the vote is automatically recorded. You do, however, have the ability to change your vote up until the time I declare voting closed. I now declare voting open on all items of business. The polling icon will soon appear. Please submit your votes at any time. I'll give you a warning before I move to close voting. Ladies and gentlemen, I'm advised that a quorum of members is present. I therefore declare the meeting legally constituted and open. Before proceeding with formalities, I'd like to introduce participants joining the meeting today. Firstly, the directors of your company joining the meeting include Mr. Siddhartha Kadia, who is an independent non-executive director and a member of the Sustainability and Innovation Committee. And as at the close of the business today at the AGM, he will also become a member of the People Committee. Next, we have Ms. Tony Ann Dwyer. Tony Ann is also an independent non-executive director and chair of the People Committee and a member of the Sustainability and Innovation Committee. Next is Mr. Charlie Sartain, also an independent non-executive director, and Charlie is chair of the Sustainability and Innovation Committee and a member of the Audit and Risk Committee. Then we have Mr. John Mulcahy, an independent non-executive director and a member of the People Committee. And from the conclusion of today's meeting, he'll be a member of the Audit and Risk Committee. Next in line is Ms. Leslie Desjardins. Leslie is an independent non-executive director. And from the conclusion of today's meeting, she will be chair of the Audit and Risk Committee. And last of the non-executive directors, but certainly not least, is Mr. Grant Murdoch. Grant is an independent non-exec director and the chair of the Audit and Risk Committee. Grant retires from office at the conclusion of this meeting. So we'll say more about Grant a little later in the meeting. Also participating from the ALS Houston office is Mr. Raj Naran, our Chief Executive Officer and Managing Director, and Mr. Luis Damasceno, the Chief Financial Officer. I am personally chairing the meeting from the ALS Brisbane office, and with me is Mr. Michael Pearson, our Group General Counsel and Company Secretary. Our Head of Investor Relations, Mr. Simon Starr, will moderate questions submitted during the meeting. We also welcome the company's auditor from Ernst & Young, Mr. Brad Tozer, and Mr. Gary Goldman from our legal advisory firm, Minter Ellison, who are both attending virtually today. Ladies and gentlemen, the notice of meeting has been sent to all shareholders, so I will take it as read. I'd like to explain the format now for today's meeting. First, we'll have my chairman's address, followed by a presentation by the CEO, Mr. Raj Naran. We'll then proceed to consideration of the formal resolutions as outlined in the notice of meeting. Firstly, to my chairman's address. First of all, welcome again to the meeting this morning. I appreciate this is an unusual format for our annual general meeting, but it remains a valuable opportunity to provide an update and to hear from our shareholders. The board was pleased to report a very creditable financial year 20 result. Revenue from continuing operations was up 10% to $1.8 billion, and underlying net profit after tax from continuing operations was up 4.3% to $189 million, which was within guidance despite the adverse impact of COVID-19 in the last quarter of the year. This FY20 result and our strong liquidity position will allow the company to manage well through the COVID-19 pandemic and emerge an even stronger company on the other side. The resilience of the business positions ALS well to withstand the impact of the current economic environment and to capitalise on opportunities that may arise. ALS is a diverse business with a strong capital position, and this has never been more relevant as we look to the future now. Despite the short-term challenges associated with COVID-19, ALS is well placed to manage through this pandemic, and the key elements of our long-term strategy remain on track. We continue to focus on organic growth and disciplined acquisition growth, as well as developing new capabilities and markets. The board is also always focused on capital management, and never more so than now. Our approach is to maintain a strong balance sheet, to invest in our facilities and equipment, to fund growth by acquisition and greenfield investments, to pay sustainable dividends, and thereafter to return any excess capital to shareholders. The strength of the balance sheet and the performance of the business during the year gave the board confidence to declare a final dividend of 6.1 cents per share, partly franked to 70%. Added to the half-year dividend of 11.5 cents per share, this represents a payout ratio of 45% of full-year underlying net profit after tax. As the COVID-19 pandemic unfolded in the fourth quarter of our financial year, swift action was taken by management to further increase capital liquidity and maintain balance sheet strength. Agreement was reached with bank lenders to increase existing facilities by $200 million, providing the group with approximately $650 million of available capital in total. Furthermore, it was decided to undertake the precautionary step of drawing down $245 million of bank facilities to meet the obligation of a tranche of US private placement debt due for repayment in December 2020. Importantly, the business remains well within key leverage ratios and interest cover debt governance, and also within our internal gearing comfort levels. Given our strong balance sheet, we will continue to assess bolt-on acquisition opportunities that may arise in the current climate, provided, of course, they align with our disciplined acquisition strategy. At the end of the financial year, the board took a conservative decision to record a non-cash impairment relating to the Latin American life science business and the industrial division. In Latin America, the impairment reflects the ongoing socio-economic issues and likely prolonged impact of COVID-19, as well as the significant currency devaluations experienced in the region. Despite these factors, we remain confident in the long-term performance of this business. The industrial division, there the impairments reflect the impact of COVID-19 and the recent sharp downturn in one of the division's key customer segments, the oil and gas sector. Turning now to people, the board recognises that people are at the centre of our business, and the board is committed to building a culture that values excellence, safety, diversity and employee engagement. We are fostering a culture of One ALS, which encourages collaboration of ideas and the sharing of our successes, and of course any lessons learned from failures across our entire global network. We conduct a global engagement survey each year to measure our performance in this area, and I'm pleased to report that a high proportion of global respondents find ALS to be a supportive and enjoyable work environment with a strong commitment to the high standards of work, health and safety. On sustainability, maintaining a sustainable business is fundamental to ALS, and this year's sustainability report provides detail on our record in safety, environment, community, our clients and our people. Important progress was made in our sustainability goals, such as reducing our greenhouse gas emissions, our waste and our power usage, and this will continue into FY21. Significantly, ALS made a $1.8 billion contribution to the economies of the communities in which we operate. Remuneration, once again, we believe we've delivered a balanced and measured set of remuneration outcomes that align with the culture, strategy and performance of the business and the contribution of our executives. As I mentioned earlier, despite the impact of COVID-19, the FY20 financial performance was very creditable in absolute terms and relative to our peers, and that has continued in the current quarter. And Raj may have more to say about that later. This allowed our key management personnel to receive a portion of their short-term at-risk remuneration, albeit at lower level than last year, reflecting the challenging targets the board set and put in place. The sustained strong performance of the business over the past 3 years will result in the long-term incentive or LTI plan vesting at a portion of 75% of the maximum potential. The highlight was the earnings per share growth target being achieved in full over the last 3 years, despite the late impact of the COVID-19 pandemic. The current global uncertainty caused by COVID-19 makes it challenging to set remuneration parameters for FY21. The board believes that the existing LTI key performance indicator measures of absolute EPS growth and return on capital employed, along with relative total shareholder returns and EBITDA margins, continue to align management with the interests of shareholders, and we will be maintaining that structure for the 2020 to 2023 term ahead. The short-term incentive or STI plan, key performance indicators for FY21, will be broadly split between 60 to 70% financial measures and 30 to 40% strategic and personal measures. It should be noted that given the present uncertainty in the COVID environment, the board has decided to set its normal threshold and target financial parameters at the end of the second quarter for the financial year 21. In the meantime, though, management have been set business resilience KPI measures to achieve for the full year to optimise outcomes during the pandemic. There will be no increase in fixed remuneration for management during financial year 21, and similarly, there will be no increase to the total fee pool or directors' fees. Resolutions will be proposed later in this meeting, seeking your support also for re-election of directors, Mr. John Mulcahy and Ms. Leslie Desjardins, as non-executive directors for an additional 3-year term. John and Leslie have the strong support of the board for re-election and election respectively, and we hope to have your support as well. After nearly 10 years of service, Grant Murdoch will not be standing for re-election. As chair of the company's important Audit and Risk Committee, Grant has contended with an unusually high number of issues during financial year 20. Of course, he's handled them with all his usual insight and expertise. And on behalf of my fellow directors and shareholders, I sincerely thank you, Grant, for your years of service and dedicated contribution to the board and to the company. Turning now to culture and governance. ALS is transitioning rapidly into a true global corporate entity with the culture, strategy and capabilities to compete with and outperform its international peers. Under the leadership of Raj Naran, we have settled our core management team by promoting the best of our internal people and supplementing them with some outstanding external appointees. We have broadened the experience, diversity and geography of the board, and we're investing in world-class financial and HR systems to empower our global workforce to deliver on our strategy. We have significantly strengthened our governance practices, and the board has been actively participating in on-site visits around our global laboratory network on 5 continents to listen to our people and stress the importance of culture and strategy in achieving our objectives. With this background, the board and management team were extremely disappointed during the year to discover that certificates of analysis had been amended without justification in our Australian Coal Superintending and Certification Unit. The company acted with immediacy and transparency when it became aware of the matter, commissioning an independent forensic investigation into the processes applied to the certification of coal samples by staff. While this is only a small part of our business at less than 3% of our underlying EBIT, the board demands the highest ethical standards across every part of our business. Pleasingly, the external independent review found no evidence of similar practices elsewhere in the group, and management acted swiftly to put in place measures to ensure that these issues found in an isolated part of the business could not reoccur. Looking forward, ladies and gentlemen, given the unprecedented uncertainty in our global markets, we're not providing any formal financial guidance for the first half of FY 2021. However, Raj will provide a trading update in his address shortly. Irrespective, we are confident that the business is in a robust position with long-term drivers underpinning our strategy and structural growth in our key business areas. Clearly, this is an unprecedented time, and it is a testament to the resilience of the business and the strength of our management team that we have delivered a pleasing result for FY 20 and remain well positioned going into the new financial year. Finally, I wish to say thank you to my board colleagues for their support and their guidance during this time. Thank you to the ongoing commitment of the management team and for the talented and dedicated people across our business. Most of all, though, today, I wish to thank you, our shareholders, for your continued loyalty and support, a support we particularly value under the current difficult global circumstances. I'd now like to hand over to Raj Naran, who will provide further detail on the operational performance and strategy of the group, as well as some of our FY 21 outlooks. So over to you. Thanks, Raj. So why can't we hear Raj?
Go back. Thank you, Mr. Chairman. Good morning. I would like to reiterate Bruce's welcome to our shareholders, investors, and staff. I appreciate you joining us in this format today, and I'm pleased to have the opportunity to update you on the performance of the business and look to the future. Our people are our most important resource, and I'm pleased to say we have the #1 safety record compared to our peers. In fiscal year 20, we reported our best safety performance on record, with a further 11% reduction in our injury rate for the year and a reduction to record lows in our lost injury and our total recordable incident frequency rates. We acted quickly early in the pandemic to protect our people and business. We implemented a comprehensive response to protect our people and our clients and to maintain the integrity of our testing. This included implementing controls in line with government regulations, social distancing at our operations, optional temperature checks for all employees, and regular communications with our employees globally to disseminate up-to-date information. Our safety performance during the pandemic has enabled us to continue to safely operate the majority of our sites and to maintain business continuity and quality of our service. This was particularly appreciated by our clients and staff during this challenging period. The COVID-19 pandemic has demonstrated the strength of ALS's hub and spoke model. While each of our regions and divisions has experienced different challenges, the group's model has enabled us to respond quickly by aligning our cost base to client demand. At the same time, we have maintained capacity and the capability to preserve client service levels and capitalize on opportunities. The diversified nature of the group's portfolio positions us well to withstand the economic impact of COVID-19, and in many regions, our operations were deemed essential by local governments and remained open through the pandemic. Turning to the performance of the business in fiscal year 20, the Life Sciences business delivered revenue of $939 million, up 13% on the prior year. The business achieved margin expansion of 35 basis points compared to the previous year and was on track to deliver our 50 basis point target until the impact of the pandemic. I'm pleased to report that the two acquisitions made during the year, ARJ and Aquamisa, have performed very well and are strategically important as we grow our presence in the food and pharmaceutical markets, which continue to show long-term structural growth. Our commodity business showed positive organic growth despite headwinds in the geochemistry business. Geochemistry recorded a credible fiscal year 20 result despite sample flows being down on the previous year, with price increases supporting the organic performance. We saw early signs of growth in the mining sector before COVID-19, which impacted sample flow in early Q1 of fiscal year 21. As you can see on the graph, sample flow improved during late May and June as economies reopened and mining activity increased. I echo the chairman's disappointment with the actions of a small number of employees in our Australian coal superintending and certification unit. While this fell well short of our code of conduct and expectations of our people, processes have been established to ensure that this cannot occur again. Having undertaken a thorough independent review, we are comfortable that this issue was isolated to the small part of this business. The strong performance in our industrial business has delivered an 18% revenue increase on last year. However, the impact of COVID-19 resulted in a margin reduction of 38 basis points. The asset care business will be particularly impacted in the current financial year as clients delay maintenance spend and the exposure to the USA oil and gas related market, which has contracted following the oil price crash. While we are currently actively managing the short-term impacts of COVID-19 and the resulting economic fallout, our longer-term strategies remain highly relevant. Most notably, we continue to see structural growth in our key life sciences markets as clients increasingly seek to outsource their testing requirements. We have also identified the emergence of a number of new markets driven by COVID-19, and I will provide further detail on these shortly. Our acquisition strategy is to identify bolt-on acquisitions in our key markets where we are building our network, particularly on the higher margin food and pharmaceutical markets. We remain focused on fully integrating these acquired businesses as quickly as possible, and the success of this strategy is demonstrated by the strong performance of our recent acquisitions. The group is well capitalized, and while we had a strong acquisition pipeline ahead of COVID-19, we will continue to review acquisition opportunities that may arise from the current situation. Our acquisition criteria remain stringent, and we continue to focus on margin-enhancing acquisitions. I mentioned that there are a number of new markets as a result of COVID-19, and we have innovated to service these new markets to further support the safety of our clients and community. Firstly, we are testing for COVID-19 in humans using standard swabs taken by medical professionals and tested in our laboratory. This test was developed in our Portugal laboratory and is currently being rolled out across our international operations. There is minimal capital investment required as the equipment and expertise already exist across our life sciences network, with approximately 1,000 tests being conducted per week. Secondly, we have identified an opportunity in surface testing. This involves mapping sites for high-touch surfaces and providing testing services to identify the presence of COVID-19 and other viruses to protect against infection. Sites could include offices, infrastructure, factories, and transport, such as planes and cruise ships. We have developed testing kits and are currently rolling this service out across our global network. Thirdly, there is a possibility that virus testing will be mandated in our key markets. Prior to the COVID-19 pandemic, there was limited or no mandated testing for virus across sectors we operate in. We anticipate that regulators could start mandate virus testing across environmental, food, and pharmaceutical industries. These are industries where we already have strong client relationships and could provide additional testing services. We will remain at the forefront of government and regulatory recommendations in each of the geographies which we operate to support the safety of our clients and communities. A recent example of this work is our work with the Victorian government to test wastewater samples for early detection of COVID-19 in localized populations. Looking forward, total revenue was down 9.8% in Q1 of fiscal year 21 compared to the prior corresponding period, demonstrating the resiliency of our portfolio of testing businesses. Total revenue performance improved by the end of the quarter as economies reopened and client activity increased. There's been a degree of recovery in activity across all major markets, apart from Latin America, which continues to be the region most impacted by the COVID-19 pandemic. Life sciences was the least impacted by the COVID-19 pandemic due to the essential services it provides and the ability to operate despite economic shutdowns, although we saw a small decline in total revenue in the first quarter compared to the prior corresponding period. Commodities experienced a challenging start to the first quarter before a stronger performance in June, driven by an increase in general mining activity, with geochemistry sample flows beginning to improve, although still down compared to the prior corresponding period. The asset care business continues to be challenged as clients defer non-essential maintenance work. As I mentioned earlier, we leveraged our hub and spoke business model and acted swiftly to align our cost base with client demand. This allowed us to maintain our group underlying EBIT margin for the first quarter of fiscal year 21 at the same level as the prior corresponding period, despite the fall in total revenue. Our liquidity remains solid at over 600 million, with our leverage ratio at 1.9. We are hopeful that our first quarter of fiscal year 21 was the most challenging as economies continue to reopen around the world and sample flows return to our laboratories. In closing, our fiscal year 20 performance was highly creditable given the impact of the pandemic on our final quarter, and we acted decisively to position the group well going into fiscal year 21. None of this would be possible without a dedicated staff and management team around the world. I would like to thank them all for their hard work, commitment, resilience, and dedication during these unprecedented times. A sincere thank you to the board for their guidance and counsel, and to my family for their continued support. It has been pleasing to see the business pivot to capitalize on opportunities as they arise, and to see the strength of the group in responding to challenges posed by the pandemic. Finally, thank you to you, our shareholders, for your ongoing support. Our ultimate goal is to ensure no harm to our people while delivering value to our shareholders, and remain focused on this despite the short-term challenges in some markets. On behalf of the management team and myself, I would also like to thank Grant Murdoch for his valuable contribution to the growth of ALS as a non-executive director over the last 10 years. Thank you. I will now hand the meeting back to our chairman to conduct the formalities of the meeting.
Okay, thank you, Raj. Ladies and gentlemen, we now move to the formal business of the meeting. As I mentioned earlier, voting is open on each of the resolutions. I remind you that you do have the ability to change your vote up until the time I declare voting closed. Proxies have been received from 503 shareholders, representing over 312.9 million ordinary votes, being 64.9% of ALS's issued share capital. As we proceed through each resolution, the proxies for that resolution will be shown. I propose to vote all available open proxies given to the chairman of the meeting in favour of all resolutions put to the meeting. Results of the polls will be available after the close of the meeting and will be announced on the ASX and posted on the company's website. The first resolutions for voting are the re-election of directors. In accordance with the company's constitution and ASX listing rules, an election of directors is required each year. John Mulcahy and Leslie Desjardins are seeking re-election and election respectively as non-executive directors at this meeting. Of course, Leslie was appointed to the board in November 2019. Normally, we would have John and Leslie speak to their candidacy at the AGM, but that will not be undertaken this year due to technical constraints. However, John and Leslie's respective profiles have been outlined to shareholders in both the notice of meeting and in the company's annual report. Firstly, now to the election of John Mulcahy, Resolution 1. John was elected to the board as a non-executive director in 2012. He retires in accordance with the company's constitution and, being eligible, offers himself for re-election. John is currently a member of the People Committee and will be a member of the Audit and Risk Committee as of the close of business today. The board strongly supports John's re-election. Details of proxies received for the resolution to re-elect John Mulcahy are up on the screen now. Of the proxies received, 96.8% for the resolution and 3.2% against, with a small amount abstaining, 0.2%. Moderator, do we have any questions relating to this resolution?
Mr. Chairman, no questions at this time.
Thank you. Okay, as there are no questions, the resolution on the screen is now put to the meeting. I will now move to the resolution regarding the election of Leslie Desjardins. Leslie was appointed to the board as a non-executive director, as I said earlier, in November 2019. She retires in accordance with the company's constitution and, being eligible, offers herself for election. Leslie is to become the chair of the Audit and Risk Committee at the conclusion of this AGM, and the board strongly supports her election. Details of the proxies received for the resolution to elect Leslie are up on the screen. Of those received, 99.7% are for the resolution, 0.2% against, with 0.24% abstaining. Moderator, are there any questions on this resolution?
No questions, Mr. Chairman.
Thank you. As there are no questions, the resolution on the screen is now put to the meeting. I now move to the adoption of the 2020 remuneration report. This resolution will be decided in accordance with Section 250R of the Corporations Act. It should be noted that the vote on this resolution is advisory only and does not bind the directors or the company. The board aims to set all remuneration for key management personnel at levels which are reasonable but designed to attract and retain appropriately qualified people in a competitive global market, not just the Australian employment market. In addition, the aim is to provide both incentive and reward to executives and to align a significant portion of executive reward to growth and shareholder value, with a view to both the short and longer terms. The reward structure for the Managing Director and other key management personnel of the group are outlined in the annual report in some detail. The structure encompasses three main elements. Firstly, fixed salary. Secondly, a short-term incentive over 1 year, which is cash-based predominantly, but includes a deferred equity component if outperformance or stretch targets are reached. Then thirdly, a long-term incentive over 3 years, which is predominantly equity-based. The directors believe the pay outcomes for the 2020 financial year demonstrated that the remuneration policies are working to ensure there is a correlation to company performance and shareholder outcomes. Details of proxies received for this resolution are up on the screen. Of the proxies received, pleasingly 98.8% are for the resolution, 1.2% against, with 3.1%. I think that abstaining figure, sorry, is wrong. They don't add up to 100%. So we'll get those numbers and publish them correctly. Moderator, are there any questions on this resolution?
Mr. Chairman, I have one question asked by Perites Holdings Proprietary Limited. The question is, why have performance rights? Why pay executives to do their job? Why not penalise them if their performance is not up to scratch?
Okay, thank you, Moderator. Well, look, we think that performance rights are a key element of our strategy for remuneration. Performance rights predominantly obviously relate to the LTI plan, and we believe that the LTI plan is required in order for us to encourage management to build a sustainable business and achieve the long-term objectives that the board is aiming for. Yeah, look, I think the vast majority of companies, both international and domestic, have long-term incentive plans, some sort of share performance rights system. And bear in mind that we really should be looking at total remuneration of those three components I mentioned. Fixed salary, which is set every year by the board on recommendation from the the People Committee, and also taking into account benchmarking from external advisors. So we believe that we are incentivising our people. They get penalised if they don't achieve the outcomes that we set for them. So I think, look, as I said, the vast majority of companies use schemes like this, and I dare say, given the support of the REM report there, the 98%, I think that the vast majority of our shareholders and proxy advisors who unanimously supported the REM report would agree that we've got a pretty good system in place at the moment. Are there any other questions, please, Simon?
No other questions, Chairman.
All right, look, as there are no more questions on the resolution, that resolution that's on the screen now is put to the meeting. Right, moving to resolution 4, this item of business is approval for grants of performance rights to the Managing Director and CEO, Mr. Raj Naran, under the terms of the company's long-term incentive plan. A summary of the LTI plan and the calculation of Raj's proposed grant was set out in the explanatory notes of the notice of this meeting. As the Managing Director and CEO of the company, the issue of performance rights to Raj requires approval by an ordinary resolution of the shareholders. Approval is sought to make a grant of 144,743 performance rights to Raj in line with the company's long-term incentive plan rules. The shares will vest in July 2023, but only to the extent the performance hurdles are met. Raj will receive the performance rights and be entitled to the issue of ordinary shares at no cost to him if the performance hurdles are met. No loans will be granted to Raj in relation to his participation in the plan. The non-executive directors strongly support the issue of these performance rights, and details of the proxies received for the resolution are now put up on the screen. Of the proxies received, 95.8% are for the resolution and 4.2% against, with about 0.12% abstaining. Moderator, are there any questions on this resolution, please?
Yes, Chairman, I have one question asked by Faircase Proprietary Limited. The question is, why does the Managing Director and CEO believe he should be granted performance rights when he is already very well paid?
Look, okay, I'll take this question on behalf of Raj, because really it's important for all shareholders to realise that Raj does not set his salary. The board sets his salary, and we tell him what he's going to be paid or not. And we believe that these performance rights obviously pertain to long-term performance, and it's very important for a CEO to be motivated to achieve long-term objectives for the shareholders and not just receive a paycheck every month and not worry about what's going on in the long term. And so he gets penalised if he doesn't do what we want him to do. So I think that's a really important aspect for shareholders to take into consideration. The second thing we do point out as well, I think, is that the benchmarking that the People Committee does on CEO remuneration around the world, not just in the ASX 100 companies, but also in our TIC company peers, shows quite clearly that whilst Raj's fixed remuneration is at or slightly below the median level, when it comes to the long-term incentive plan, he's actually significantly below international standard, competing for his services. So I think it's very warranted for him to receive these performance rights. Raj is not a greedy person. It's one of the things that I like about his situation in the company. He's not doing this just for money. He's doing this because he has a burning desire to do the job, and he has the full support of me and the board in this. Okay, so Simon, moderator, are there any additional questions on this resolution, please?
No other questions, Mr. Chairman.
Thank you. As there are no other questions on the on this matter, the resolution on the screen is now put to the meeting. Okay, we move now to resolution 5. This item of business is approval of amendments to update the company's constitution to reflect changes to the ASX listing rules that came into effect on the 1st of December 2019, which, among other things, introduced a two-tier escrow regime to facilitate escrow arrangements. Reasons for seeking this resolution are detailed in the notice of meeting on page 7. The changes allow escrow arrangements to be imposed without execution of a formal escrow agreement. provided this is permitted by the company's constitution. It's important to know the company does not currently have any restricted securities on issue, and it has no present intention to issue any of these sort of restricted securities. The amendments are proposed to give the company maximum flexibility if it wished to issue such securities at some time in the future. Details of the proxies received for the resolution are up on the screen now. Of the proxies received, 99.9% are for the resolution and 0.1% against. Again, I question the abstaining figure there of 2.96. It doesn't quite add up, but we'll get those accurate numbers posted on the website for you. Moderator, are there any questions on this resolution?
No questions on this resolution, Mr. Chairman.
Okay, thank you. As there are no questions, the resolution on the screen is now put to the meeting. Thank you. The last resolution is to confirm the appointment of Ernst & Young as the company's auditor by obtaining shareholder approval. As announced to the ASX on the 25th of September 2019, the board appointed EY as the new auditor to fill a casual vacancy following the resignation of KPMG. EY has consented to the appointment and has not withdrawn its consent to the appointment as of today. Details of the proxies received for this resolution are also up on the screen now. Of the proxies received, 99.7% are for the resolution and 0.3% against. And I see we have the same issue with the abstaining number. Moderator, are there any questions on the resolution?
Yes, I have one question, Mr. Chairman. This question comes from Norman West. The question is, could the auditor provide further clarification on the increased leverage covenants on page 94 of the annual report?
All right, look, I'll ask Brad Tozer, who is present today, to answer that question directly. Over to you, please, Brad.
Thank you for the question. The question refers to key audit matter number 4, ongoing concern in our audit report. As disclosed in note 7A to the financial statements on page 78 of the annual report, ALS reported, the group's bankers have agreed post 31 March 2020 to increase the maximum leverage covenant to 4 times. We referred to this item in our key audit matter number 4 as increased leverage covenants. Thank you, Chair.
Thank you then, Brad. I hope that answers the shareholder question. If not, we're quite happy to correspond with you as we are with any of the people asking questions. If we didn't answer any of them appropriately in your mind, then please contact us directly and we'll make sure that we get additional information to you. Okay, Moderator, are there any other questions on this resolution?
No other questions on this resolution, Mr. Chairman.
Okay, thank you. As there are no more questions, the resolution on the screen is now put to the meeting. Thank you. The final item of business is consideration of the financial statements and reports. The company's financial statements for the year ended 31st of March 2020, including the director's report and the report by the auditor, were provided to shareholders in the 2020 annual report. Shareholders are now provided the opportunity to ask questions regarding the financial statements and reports, the operations and management of the company, or questions to the auditor in respect of the audit report. As we know, Mr. Tozer, Brad Tozer, representing EY, is available today to respond to any questions in relation to the conduct of the audit and the preparation and content of the auditor's report. Moderator, do we have any questions, please?
Yes, Mr. Chairman, we've had several questions on the same topic, so I'll read them all as one. The debt profile on page 18 of the annual report is close to the facility limit. The company has been able to accommodate the level of debt, which has increased again in both absolute and percentage terms. What is the board's long-term view of this situation? And what does the board think is the likely effect on future profits? Well,
look, maybe this is a financial question that I might ask the the CFO to answer in the first instance. I understand Luis Damasceno is on the line. Raj, maybe Luis, if you could address that, please, in the first instance.
Yes, Mr. Chairman. First, regarding the level of debt, it's important to note that before the end of the financial year, the company adopted a prudent approach to draw down the 245 million from our bank facilities to cover the USPP tranche, and this amount was placed in a US denominated account. And also, after the close of the financial year, as we disclosed to the market at the time of the release of our results in May, the company increased the existing bank facility limits and it currently maintains very strong liquidity, over 600 million. When we evaluate the liquidity level that we currently have and the leverage ratio at 1.9, as highlighted by Raj, we believe these elements place the group in a solid position to finance its operations, to meet the maturation of the USPP, and to continue to execute on the bolt-on acquisition opportunities.
Okay, thank you, Luis. I hope that answers the question. I'll just make the observation from the board level. We have very strict policy limits on our leverage ratios, on our gearing and interest cover, and we monitor those at every board meeting. We also, as chairman, I get updates periodically from Raj on this matter, and I know that Luis keeps the chair of the Audit and Risk Committee informed at all times as well. So, I think we've taken all the precautions, and you will note from Raj's presentation that the company is probably trading better than we thought when we went into this pandemic. And so we're very confident as a board that we're in good financial standing. Okay, then please, moderator, any additional questions here, please?
Yes, I have a question from Shareholder Device Co. Proprietary Limited. The question is, on 6 May, the company announced that the banks have granted temporary relief to the leverage covenant for the remainder of FY21. Does the company plan to reinstate the DRP or to have a new share issue to reduce debt to a more acceptable level?
Thank you. Look, it's a very easy one, no and no. The DRP is suspended whilst we still have the share buyback in place, and that remains an important part of our capital management strategy in the near future. And as outlined by Luis, the balance sheet is in good shape, and we don't see the need to have a capital raising for that matter at all. In fact, we think we still have scope to make bolt-on acquisitions. The company is trading well. We never say never, of course. If we were going through a larger acquisition, that situation may change. But there's nothing on the books there at the moment that would warrant us to say anything further about that. Simon, any other questions?
Yes, I have a question from shareholder Joan Lynch. Her question is, how is the company preparing to deal with the ongoing threat of COVID?
Raj, I think this is more of an operational matter. I'll throw to you to answer that one, please.
All right, thank you, Mr. Chair. The management team is highly experienced in managing the group through all the economic cycles and has moved swiftly to strategically align operations to different client demands in each market. ALS has a diverse portfolio of operations across a wide range of geographies, and its diversification, which has enabled the group to maintain its resilience in this challenging economic environment. In addition, management acted swiftly by aligning the cost base to client demand, strengthening the balance sheet, and increasing the amount of liquidity available to the group.
All right. Thank you, Raj. Simon, next, please.
The next question comes from Darshan Singh Panu and Anne Mete Kivas. The question is, How is the organisation currently helping small to medium shareholders to recover during COVID?
Okay, an interesting question. Look, I think the best thing that we can do as a company, a management team and a board, is to ensure that the business remains resilient in these challenging times and that it remains profitable. And that's going to benefit all shareholders in the long term, not just the small to medium ones. I'd also make the observation that as a company, we paid a dividend at the half year, or at year end for the half, of 6.1 cents per share, when many other companies weren't paying dividends at all. And so one of the factors we took into consideration is that we have quite a large percentage of retail shareholders on our share register, and they depend, a lot of them, on dividend flow. So we felt that that shareholders deserved a dividend to be paid. We felt we had the financial strength to do that, and that's proven to be correct as we're starting to emerge from the pandemic. And so I think they're the two things that would help shareholders. One, in the recent past, but we're looking to the future to make sure we look after all shareholders. Simon, next question, please.
The next question, Mr. Chairman, comes from the same shareholders. Their question is, what cultural change has enabled the company to deliver on its strategy?
That's a really good question. I'd open here by just suggesting up front that the board and the company and management team have not changed the values of ALS, which really are at the core of our culture. So, we still look at the values of integrity and collaboration, continuous improvement, our One ALS policy, etc. And they've been the foundation of the success of the company. But I think strategically we're moving to more of a global organisation. As I pointed out in my address, we've invested a lot of money in trying to ensure we have the right people in our positions. We've got promoted the best of the best people into senior management positions from our internal candidates. We've brought some people in from outside to bring some new thinking into the company. We've diversified the board with international appointments and more diverse thinking in terms of their backgrounds. And on top of that, we've invested in these updated HR systems and financial systems that will assist the company in the future, or assist our people achieving the best outcome they can achieve for the company. So it's again, I thank you, because this is a really, really interesting question. But I think the culture of ALS is really well understood internally and hopefully externally. If it isn't, we're quite happy to talk further about it. Raj, have you got anything else you'd like to add to that? Because it's also very, very strong in supporting the culture of the company.
Thank you, Mr. Chairman. I think, Mr. Chair, you covered off on it. I mean, the only additional comment I make is really from a ALS culture, our core values, our culture around One ALS is a global culture. And that's very well embedded in our people in terms of transparency, communications. And I think you've covered off on everything else, Mr. Chair. Thank you.
Yeah, Raj just raised another point, or prompted another point in my own mind. As a board, and I particularly personally, over the last 2 years, I've visited virtually all of our major hub laboratories around the world, and my colleagues have been visiting a lot of those also. And we don't just listen to what our people are saying there, we do talk to them genuinely about the culture we want and the strategy of the company, and how the board and management team are in lockstep to deliver that. And one of the things I stress when I talk to our people about culture is that we don't expect them to adopt just an Australian culture. Like we operate in over 60 countries around the world, and it would be unreasonable to say to all of our employees, hey, you have to be an Aussie, a true blue. And just like I say to them, you can't expect us in Australia to adopt your culture, but we can adopt a set of corporate values that are common to all different cultural, ethnic groups around the world. So we've got to find things that bind us together, and that's the culture that we try to promote within the company. Simon, next question, please.
Yes, Mr. Chairman. The next question comes from the Australian Shareholders Association. Their question is, congratulations on a comprehensive sustainability report. Given the continued media reporting of cyber attacks and IT security on countries and companies, a global company that seems dependent on IT, and as a global company that seems dependent on IT, how does the board and management keep abreast and on top of this function?
All right, well, look, for the first part of it, I'll ask Raj to speak to the cyber defences we have in place. And the second one, with how does the board keep abreast of it, I'll answer that after you, Raj.
All right, thank you, Mr. Chair. I mean, ALS has numerous external monitoring systems that continuously, 24 hours a day, 7 days a week, monitor our operations, both from an email perspective, internet, threat environment. We partner with world-renowned security firms, and we monitor this on a regular basis. We've got IT security experts within the organization and people around the globe that monitor our operations on a regular and continuous basis. Additionally, we spend a lot of time training our staff in terms of cybersecurity and safe computing practices within the business to prevent any form of attack from within the business. So from our perspective, we're always monitoring our systems. We're always improving our monitoring. There's always a new virus out there. There's always a new malware. And we're working with global renowned companies to help us monitor those systems. And we feel like we're doing a very, very good job in terms of monitoring the systems, given the current environment of very, very aggressive attacks.
Thanks, Raj. And how does the board monitor this? Well, look, we have a number of monitoring methods. The first one is every board meeting we get an IT report, and part of that is statistics on cybersecurity and the number of attacks that are attempted and phishing exercises, and they are staggering numbers. We haven't had any significant breach to this point in time, which has affected too badly our operations, which is really good. We also have had, as a board or one of our subcommittees, the Audit and Risk Committee, have had deep dives into security. So we allocate significant time at one of our board meetings. I think the last one was at our international board meeting, and we question management on the controls in place. Then the Audit and Risk Committee monitors reports that have key performance indicators for cyber security. And the other thing that we did is we got an external hacking test. So that's just so that a third party, we can get those bright young people who enjoy doing this sort of thing to conduct an external hack test for us and talk to us about our vulnerabilities. And then if any arise, the board authorises management to fix them promptly, and then we monitor the progress to achieve those as well. So I hope that answers the ASA question. Simon, is there another question on this item, please?
Mr. Chairman, the final question. This comes from GetWise Proprietary Limited. Question is, can you please provide any colour around the uptick in gold mining exploration and implications for mineral testing?
Thank you. As a very up-to-date shareholder, I would suggest. Raj, I think it's more appropriate for you to speak to this one, please.
All right, thank you, Mr. Chairman. I mean, we all have seen gold pricing reach record highs. We've seen mining activity significantly increase, especially in gold. And we've also seen capital raisings reach significant higher levels than they have over the last 12 months. We believe that will have a positive impact to our geochemistry business. We are seeing increased activity. We've seen an increase in sample flow activity towards the end of the first quarter, and we believe as that activity continues to increase due to our position globally as the leader in geochemistry testing, we believe the business will see an impact and a positive impact from that increased activity.
Thanks, Raj. And probably just to add a little colour around it, I had one colleague not associated with the company saying to me just recently that they were getting 3 term sheets a day from ASX-listed companies looking to raise money for gold exploration. And so, yeah, that's a phenomenal sort of uptick in at least Australian activity. But bear in mind, we're a global business, and that is one part of our business. I believe we're seeing similar trends, probably not as frantic in Canada, but it's a nice trend to have going for us rather than against us. Simon, any other questions come in?
No further questions, Mr. Chairman.
All right, well, thank you, shareholders. Ladies and gentlemen, as there are no more questions, that concludes our discussion on the items of business. In 1 minute, I will close the voting system. Please ensure that you have cast your vote on all resolutions. I will now pause to allow you time to finalise those votes. One of the disadvantages, ladies and gentlemen, of doing virtual meetings is you can't see your people finishing their voting. So I'll give you another 10 or 15 seconds and then we'll close. Okay, thank you, ladies and gentlemen. Voting is now closed. There is no further business to be conducted today. Results of the poll voting will be announced to the ASX as soon as possible after this meeting and will also be posted on the company's website. I now declare the meeting closed, and in doing so, thank you for your participation today. On behalf of the board and management team, I send our best wishes for you and your families for a safe and healthy future. Thank you.